Hello, traders out there in Traderland. My name's Dez here at Grok Trade, mentor and analyst, and it is Monday, December 13th, 2010. Markets in mix for the day. We have gold up almost to $1,400 an ounce. We have the dollar that is up, or I'm sorry, the dollar is down by 1%. You had crude oil that is up. And you have the Dow and S&P both showing positive for the day, but the S&P is at break even. Dow really is too. They gave back all their gains from this morning. But you had the NASDAQ and Russells really pulling the markets down all day long. They led the markets to the downside. You have the Russell's down 0.6%, 0.5% on the NASDAQ. Banks were also lagging the broad markets as a whole, so it's really hard for the markets to stay bullish when you have that sort of pressure on the markets. However, the VIX volatility index, the fear indicator, dropped 0.3%. Normally that should be up if the markets are bearish. And we have a whole flurry of mergers out there and some... Let's see here. Yeah, mergers, the tax cut deal going through is really taking some pressure off of Bernanke and the boys. And yeah, that's it as far as news is concerned. Other than the fact the judge has challenged President Obama's Obamacare. So some news out there, and we'll see how the markets digest some of that action. But check this out. Higher high, higher low, but we have a good old-fashioned, what's called a shooting star candlestick reversal pattern. What is a shooting star? It looks like an upside-down hammer, and it could be black or white or green, doesn't matter the color, with an upper shadow 2 times or more that of the body, with little to no lower shadow at the high of a leg. And that's precisely what we have here. We had this before, so let me explain to you again what we have to have for a confirmation of a trend reversal. Again, we're looking at the S&P daily, just to keep that in mind. For this to be confirmed, we need to have a close, not a low, but a close lower than 1240. 1240 would confirm a candlestick reversal pattern, and at that point, you should be looking forward to a drop. Now, the last time we had this, oops, shut that off. That's my phone on my Droid X. Hey, if any of you guys have the Droid X and you have a cool application that I just have to have, put it down in the comments or shoot me something in the forums or at the website and let me know. And all right, but anyway, stay focused here. The last time we had this, we made a lower low, but that's not confirmed. Confirmed is a close lower than this low. So this shooting star reversal pattern was not confirmed, thus we go higher. Here we need a close lower than 1240. If we get something lower than 1240, the markets are now in a correction mode. Bears will now be in control. Now, if that were to happen, which is very likely, I mean, look at this big run that we've had. We're due for a pullback. The question is how far of a pullback will it be? A little mini-me? Will it base sideways and pop? Or will it be a major correction? It's anybody's guess. Don't try to guess, because that will always lose you money. What we need to do is just play what we see. And I'm giving you the absolute best when it comes to the understanding of what the markets are doing to help stack odds in your favor, to help you be a better, more profitable trader overall as a whole. Now, if the markets do drop, you can do a few things here. The longs that you should be in right now, just stop out in those, preserve profits. Or you can hedge yourself. Hedging, what does that mean? Just offsetting your current positions with other trades. And what that does is that protects your profits. So no matter what happens tomorrow or the next few days, you are safeguarded by a hedge being in place. Now, if you're flat the market, you're also safeguarded. What smart, savvy traders do is we don't like to keep ourselves exposed to significant market risk. So what we like to do is either be out of the market or be hedged during those times that that we have increased probabilities of the markets to go into a correction. All right. Maybe you don't know how to hedge. That's fine. We have a very popular hedging webinar coming up in 2 days. It's Wednesday night, December 15th. Starts at 9 p.m. Eastern Standard Time. The webinar does. And then that would be 6 Pacific Time. If you can join us, fantastic. Just go to the website, freeonlinetradingeducation.com. Click on Calendar Events over on the right-hand side. Click on Hedging Seminar. And in there, you can register and join us in a couple nights. On Wednesday night. That'd be great. The other thing is really cool Spanish. We are now in Espanol. We were doing our very first mentorship with Miguel this coming up weekend. If any of you speak Spanish, that is your primary language, and you want mentoring and you want the best of training, we are doing a big time discounted rate because this is our kickoff. I'm sorry for the late notice. You have 1 week to get going here. We have 3 seats available, 3 seats, and we'd love to have you. And also ours that we have going on, we have one in English that myself and Scott will be teaching, and that will be coming up this weekend. Just go to meetthementors.com, watch the video, get signed up if you want to know more. We'd love to have you. Coming up soon. Take care. Safe trading, each and every one of you.